sad reality of trading is that 90% of traders fail, but they don't fail once or twice, they fail forever. That's right. Out of 90% of traders that put money into the market, they will never make a single dollar from it. So the question is, why is this? What's happening here? Is trading actually insanely difficult, or is there something else going on? Well, in today's video, we're going to offer a potential solution for why 9 out of 10 traders fail forever, and a few things that you can potentially do to enter the 1%. When it comes to trading, many of us have a similar origin story. Sure, we might have been introduced to it by a friend or even a family member, but most of us start out thanks to social media, or should I say toxic social media. I'm sure many of you were at 16 scrolling through Instagram and found some trading influencer with his Lambo or Rolex or a screenshot of his laptop by the pool in Bali. You know what I'm talking about. This is how many of us first get into trading. However, in hindsight, this is a very unfortunate way to first get introduced to trading. You see, if 90% of traders fail, then 90% of influencers also fail. Having worked with many influencers at Lark Funding, unfortunately, I can assure you that this statistic is accurate. Now, of course, there is nothing inherently wrong with being a social media influencer or a trading influencer. The problem, however, lies in the impact that it has on traders. And the impact is one that many people don't even realize is affecting them. You see, when we're scrolling through Instagram or Twitter and we see these traders that are making so much money and making it look easy on top of it, we start to think, hey, what the heck am I doing wrong? What is wrong with me? I'm not driving around a Lambo. I am not taking 20 vacations a year, and I am not making 6 figures worth of profit on every single trade. So what am I doing wrong? And this, of course, is what funnels money into the influencers' courses, right? You see an influencer, they're doing fantastic. You are not doing fantastic. So you say, let me sign up for their course. They know what's going on. Now, naturally, you sign up for the course, you maybe learn a thing or two, but you go on to realize that it is not the holy grail of trading. And that is how the cycle repeats. And unfortunately, I am a perfect case study for this. I spent over $10,000 on courses before I made a single dollar. So to backtrack, this is the main hypothesis of this video. You see, trading influencers make things look easy. And because trading is never easy, it will never be easy, no matter how long you are in the game for, it leads traders to mixing up and changing their strategy rather than playing the long game. You're struggling, but your strategy could be completely fine. So rather than sticking it out and playing the long game, you jump ship and you strategy hop. You try something else, when in fact, the only thing you actually need is time. If we now understand that 90% of traders fail, which also means 90% of influencers fail, the question is, where does that leave us? We still want to become profitable and successful traders, so where should we look? You see, I spent $10,000 on courses because I always bought into the lie that something was missing. I wasn't yet successful because I needed to take another course. I didn't have enough experience, and so I wanted to learn from somebody else. I needed to spend that money because I accepted the false lie that something was missing, when in fact, nothing was missing. You see, because 90% of traders fail and because 90% of influencers also aren't successful, I wish I could go back to my 17-year-old self and tell him that if everybody is looking left, you need to look right. And some of the very best trading content is actually content that has absolutely nothing to do with trading. You see, one of the most difficult pills that I had to swallow when I was first trying to become a profitable trader is that there's no secret sauce out there. There is no strategy that is going to massively transform your trading. And the most harsh reality is that every single course out there is just a repackaging of baby pips. Yes, it might be packaged better, it might save you time, which is fantastic, but there is nothing out there that you cannot find for free online, on YouTube, or on baby pips. Everything is just a repackaging. Now, if you disagree with this, that's good. You're thinking for yourself. I didn't agree with this for the longest time, but after taking enough courses, I've come to realize that the only difference between a successful and an unsuccessful trader is likely time, patience, discipline, risk management, but it really has nothing to do with the strategy itself. You see, many traders like to focus on backtesting. Backtesting is kind of this flex on social media saying, oh, Saturday, Sunday, I'm spending 6 hours backtesting. But my opinion is, if you have been trading for over 6 months, backtesting is a complete waste of time. It is just a fancy form of procrastination. I failed for years and years because of my emotions and because of my executions in the market, neither of which improved with backtesting. And this brings us to the discussion of psychology. I think emotions are really what differentiates terrible traders from great traders. That's especially the case for me. And so there's one very specific tool that I would like to pass on to you that helped my trading so much, but more specifically, helped my trading psychology and really took the emotions out of trading, and what I call the set and forget. So you enter a trade, you set your take profit, you take your stop loss, and then you walk away. It's very simple. You're no longer going to play with your trades. And this for me took the emotions out of trading, and it made a massive, massive difference. Now, if you do this starting today, you're going to want to watch the trade. You might play with it. And if you're doing that, that means that you might be risking too much. Whereas, for example, if you set a 0.01 lot trade, it's super easy to forget about it. I can let a 0.01 lot trade run for months and months and completely forget about it. So if you're having a hard time doing this, of trying this exercise, try lowering your risk and then seeing if you're able to forget it. But for me, this made a massive difference in my trading. Okay, now that we understand that 90% of traders fail, and that means that when everybody is looking left, we need to look right, I would like to offer a quick discussion on the value of looking at the bigger picture, aka fundamental analysis. You see, most traders focus on technicals. That's great. Some traders will even focus on sentiment analysis, which I think has a time and a place. But for me, my big passion in trading was fundamental analysis of understanding what's actually going on in the world and how does that impact markets. So, for example, if you're a scalper, the fundamental analysis isn't necessarily going to be a massive game changer for you. But if you start to do intraday trading, position trading, swing trading, for me, fundamental analysis was a huge lever that I could pull that totally transformed my trading. And it's a lot of fun of understanding what's actually going on in the world. When I first started learning about fundamental analysis, I quickly learned that if the market reverses off of a trend line, it's not actually because of the trend line. It's because something is going on in the world, some news event, some macroeconomic data, or whatever it is responsible for the market switching and reversing positions. And if you want to catch those big moves, I think it's very important that you integrate, whether it's a little bit or a lot, some form of fundamental analysis into your trading. Now, for me, fundamental analysis was actually a little bit dangerous. I went so deep into the fundamental analysis rabbit hole that it completely destroyed my trading because I forgot that at the end of the day, we are traders, we are not analysts. And so I do want to mention that because no matter how interested or disinterested you are in this topic, it's important to remember at the end of the day, we are traders. We're pressing one of two buttons. We are buying or we are shorting. And so while I do think there's a ton of value of learning fundamental analysis concepts, you don't want to go too deep down the rabbit hole. The whole thesis of this video is if everybody's looking left, how can we look right? And when we look right, what is actually there? And for me, that was fundamental analysis. Okay, so rather than just repeating the word over and over again, what does it actually mean? I think that there are roughly 3 levels of fundamental analysis that you can integrate into your trading. The first level is the most easy and is something that I recommend all traders do, and that is just watching major news events and staying away from the market of saying, hey, I was going to trade today, but at 9 a.m., there's a major news event, whether it's an unemployment rate or a Fed decision, an interest rate hike, whatever it is, I'm just going to stay out of the market. I think that this will help you avoid getting burned completely unnecessarily. And that is level 1. Level 2, however, is starting to look at the data and asking yourself, what does this mean long term? If the Federal Reserve is beginning to talk about cutting interest rates, well, what does that mean for your trading? How are you going to position yourself as a result more long-term? It doesn't mean that you have to have a bias and you will now only buy gold or only sell gold, but it's something that you have in the back of your mind when you are trading and asking yourself, okay, what's the bigger picture here? What's going on? Is this trade going to do 30 pips or could it do 300 pips? Well, by focusing on fundamental analysis, you might actually now have some data to back up the answer to that question. And lastly, the third level of fundamental analysis, which is not easy, it's not something that I even do all the time, but it is using all of the available data points and geopolitics and every single thing that you can to gather a bias, develop a bias on a swing position. So you will say, because of X, Y, and Z, I am going to hold a buy on gold or GJ or a pound Aussie or Euro US, whatever it is that you trade. I'm going to hold that position for weeks or months or whatever it is. Or it could be a bias that you use for your intraday trading strategy. So you say, I'm only going to buy Euro US intraday for the next 3 months or until XYZ piece of data changes. Now, I understand that this is probably complicated. You're probably not getting a whole bunch of actual goodies from what I am saying here, especially if you are new to fundamental analysis. You don't understand a sentiment analysis and how different pairs trade, risk on versus risk off, tons of stuff. So we do have a resource down below. It is our new newsletter, Lark Digest. It is a Monday, Wednesday, and Friday newsletter, completely free. It will always be free. It is something that we are working really hard on this year at Lark Funding. Going to be sharing a ton of value in there, including fundamental analysis. We're working on a free 5-day fundamental analysis transformation email course, so you can subscribe down below and you'll be one of the very first people to get access to that. If you're like me, you probably spend a ton of time on social media, both Instagram and Twitter, looking at traders, getting motivation, but I hope that this video gave you something to think about, a framework to keep in mind that if 90% of traders fail, many of the things that you see on social media are likely fake as well. And that is having a negative impact on your trading, because you might be doing the perfect thing. You might be on the exact right path. But if you get discouraged because you're not seeing the same results as others, then you won't stay the course. That's going to set you up for failure. If all of this sounds complicated, don't worry. It can be done. Success can be found. And that is why you should watch this video here on the interview that we did with a trader that received over $30,000 in payouts. If you made it this far, we appreciate it. See you in the next one. Until then, peace.